My name is Zachary George, and I'm currently a junior analyst. This report was also done by Jordan Espy, who's a junior analyst, and Ethan Hahn, who's also a junior analyst. Today, we are going to be pitching a buy on Magellan Midstream. It's in a very similar space as David's company, Enterprise Products. So I think it's a good company to have as far as something to compare to. Our company overview, our revenue segments are in three different spaces: refined products, crude storage, and then marine storage. In the refined products section, we've actually recently seen, there's 9,800 miles of refined products pipelines with 53 terminals and 26 independent terminals. So those 53 terminals are attached along the pipelines, and then those 26 independent ones are there to kind of subsidize what's left over because they are in the major markets. There's also 22,000 miles of crude oil pipelines with 26 million barrel storage capacity. Currently, they have 16 of those 26 million barrels used as contract storage. So there's a significant portion that's always going to be available. And then there's 5 marine terminals located along the waterways with also 26 million barrel storage capacity. Recently, as of January, you saw a sell-off of 3 different marine terminals. So they're really focusing more on the crude storage and the refined products moving forward. As far as the SWOT analysis is concerned, a couple strengths is they have a reliable supply chain. I think something you're really seeing too is obviously with Saudi Arabia and Russia going at this oil battle, you're seeing a lot of midstream companies kind of benefit from that because there is still oil moving. Obviously, the quantity is not there in comparison to what it's been just with travel, hospitality, and those other industries seeking or being able to buy up a lot of oil. But product innovation as well and new R&D testing, they're pretty top of the market as far as MLPs are concerned with their testing. And then they're actually also trying to use artificial intelligence and data mining in order to create new opportunities. So they're basically running these algorithms in order to find any kinks in the chain, almost as you would with the supply chain. A couple weaknesses, obviously the capital intensity, it's a hard industry to get into. MLPs are a little bit easier to get into in comparison with other oil companies just because they're a midstream company. So they're just moving to and from, but it's still something that's going to cost you a lot of money to get started. Also heavily regulated, and then revenue is subject to pretty vast concentration. A couple threats are obviously changes in environmental law. That's something you kind of see hints and little pieces of, but nothing major. I think moving forward, it's obviously going to be something that's has to be talked about just because of we're going into a space where you're seeing a lot of even ESG funds, a lot of millennials like that kind of stuff, a lot of just taking care of the environment. So I think that's something that we kind of need to be aware of moving forward as far as this energy space. And then market competition and political climate. Political climate is just because kind of ever changing. So you're seeing some people that are oil friendly, some people that are not so oil, gas, coal friendly. And then the market competition is just, it's healthy, but it's still something, there's obviously little bits and pieces that make up the entire MLP segment. And then moving on to the drivers. So like I said, the world price, or like I said, the Saudi and Russia kind of price war, if you will, is still kind of, I think, keeping some of these MLPs really alive as far as cost of goods sold is concerned, just because there's a lot of oil still moving. I believe they finally signed a production deal at 10 million barrels, but it's also kind of not as low as they were thinking. Interest rates. Magellan's a company that's got a very high, ROE. Their ROE is 38.10 and an industry average that's around 11.3. And then, so they've been able to capitalize on low interest rates as of recent. The U.S. oil and gas production index is also something that kind of drives it. We're creating more gas and we're moving more gas into those major markets. That's something that's going to be funneling through. So that's definitely something to keep track of and something that drives sales up or down. And then customers and contracts. Most of Magellan's contracts are with customers who have really high credit ratings, so it's sustainable in the long term, and it's something that's, these customers aren't going to be affected by what is COVID-19 and even the price war in Russia. But it's still something, obviously, that drives either north or south. And then over here is just a graph of the Porter's five forces. I think the threat of substitution is kind of coming on as you're seeing companies like Tesla and even GM and Ford starting to adopt these electric models and these alternative fuels models. But again, I think we're pretty far out from that, so it's not something that's immediately concerning. Threat of new entrants is low. Competition is low in comparison to the overall oil and gas industry. And the power suppliers should probably be a little higher now that I'm looking at it, just because those suppliers are dependent, or that oil coming through is dependent on those suppliers. But at the end of the day, you need demand in order to drive all of this. So that's why I put power of customers as one of the most important points. Just a couple of risk factors, obviously changes in demand. You're seeing market risks, macro effects such as COVID-19 and the oil war, price war, some internal risk, and then I put legal risk as kind of gray just because in the MLP field, there's not as much legal risk as when you're dealing with refineries. So it's important to kind of note, but it's not as pressing as it is with TransCanada or Exxon or Shell. So just to kind of skim through the competitor breakdowns, their PE in comparison to their competitors is at a good point, I think, for what it's trading at. Currently, it's trading at $37. They're operating with a 37.42 profit margin. And then their cash flow is a little lower, but then again, they are kind of different from companies such as Energy Transfer in the sense where they pay their unit holders out differently. And then their ROE is obviously, it's kind of hard to miss that just because it's, in comparison to its competitors, it's something that obviously sticks out with interest rates being as low as they are right now. So they're able to fund products and then return a really good investment on those products at the same time. Comparable companies analysis. So the book value is a little low, but then again, it's something, it's a little bit different. So that's expected. Their balance sheet's not quite as strong, but they're able to pay out their unit holders, or they're able to pay out their unit holders at a much higher rate. So we've actually, Magellan over the past 71 quarters has raised dividends every time. That's obviously something that's probably going to be, it's probably going to go flat or down at the end or towards next time we're getting ready to pay dividends. But I think it's something that's, 71 quarters in a row is pretty solid. So we've got a price to EBITDA at 10.21, which is obviously a little bit lower than average, but it's healthy. Their PDE is also healthy, and then their price to book ratio is, it's top notch in comparison to any comparable companies. So this is the interest coverage ratio. They're at 5.31 times. So they are one of the leading industry, or one of the leading companies as far as interest rate coverage ratio is concerned. And then their financial analysis. So I'm going to skip, while I talk about this, skip to this appendix. So for 2020, I'm going a little conservative. I'm projecting negative 5% growth, but by 2021, we're back up to 7% just with everything going on. I think there's an opportunity once these industries start getting kind of really rolling, hospitality, travel, all those industries start to kind of boost back up. I think you're going to see some major growth, not only from this company, but just from this sector. So going back to the financial analysis, you've seen it's a little bit different than a normal balance sheet just because it is an LP, but you've seen some really good sales growth here in the last couple of years. You've also seen some pretty good EBITDA growth. Something that's also I really just want to highlight here is the return on equity. The return on equity is constantly even in 2020 with a projected negative growth of 5%, you're still returning 80% on equity. And their leverage is obviously good enough to withstand this storm, or to withhold the storm. And then moving on from this is the dividend discount model. So I used a perpetual growth rate of -1%. I think that's conservative. I think it should be closer to -2, a risk-free rate of 0.62. And then we've got a potential upside of 115% with a value per share of 74.63. Personally, I think this is a little high, but I still think between $60 and $70 is somewhere where I'm really comfortable valuating this thing at. So it's something for me. I feel like there's a lot of money to be made in the short term, but I think long term this has a lot of potential growth. And then, so for our valuation, we used an EV to EBITDA just because a DCF looks a little funky. It gave us a negative CAGR, so it's not something I'm really not comfortable with valuating it at. So anything, the way the EV to EBITDA ratio works is anything below 10 is considered healthy. Obviously, the industry average is at 5.14, so at 9.2, it's a little high, but again, anything under 10 is considered healthy. And so for our investment thesis, I believe that it's my belief that just with a subsector leading ROE, really good interest coverage, 37% profit margin, and then a healthy EV to EBITDA with a better than average industry PE gives us equity a really good opportunity to return at least 50% even in the short term.